10 seconds. -1.5%, -1.5%, lower than the forecast of -1.3%. US initial jobless claims 210k, 210k. That's high, lower than the forecast of 215k. US retail sales month on month at 0%, 0%. That's lower than the forecast of 1.4%. So we then get US GDP deflator prelim at 8.1%, 8.1%, higher than the forecast of 8%. US core PCE prices prelim at 5.1%, 5.1%. That's lower than the forecast of 5.2%. US continued jobless claims 1.346 million, 1.346 million. That's higher than the forecast of 1.31 million. US PCE prices prelim at 7%, 7%. And the Canadian core retail sales month on month at 2.4%, 2.4%, higher than the forecast of 2.1%. So taking a look to the markets now, did you see some slight downside movement on the S&P 500 there? Pretty muted. Otherwise, Canadian dollar pretty level after that as well.
Right, guys, we've just traded GDP there. I took a short on that. I actually didn't have my screen on, so I really apologise for that. I've got to stop at my entry point. I think I might just move it above this little area of high volume here. So let me just get rid of this chop because there's no chop here. I got in pretty quickly,
sales at 151.7k, and wheat at -2.4k
pretty
as
decent
well.
miss.
We have posted out the US initial jobless claims reports on the feed as well for those interested,
as well
as the Canadian retail sales report for March 2022.
I think this might be, I might just take a little bit more risk. I sold 12 lots. I'm going to take another 3 lots off here just to cover some of that risk. So I'm going to move my stop. I've covered my risk, but we're not getting the movement back down to where I want it. It might be a case of it coming back to scratch. But I'm actually going to put this little area of high volume as... Oh no, I missed my stop. I missed my orders. Okay, I'm out. Okay, made a little bit of money on that one, but yeah, that's just an example of how I got in a really good price. I just got in at 95s, I think, here, but the bloody thing's come all the way back and spiked me through back to the century figure. I think it still might move back lower, but we had a bit of a mixed bag. We've got can you hear me? I don't know. We're not in a chop zone. Let me get rid of that. Sorry.
So just taking a look through this GDP data for the
yeah, that was just me trading GDP
Q1
numbers
in the US. The GDP price index rises
I sold 12 lots at
8.1%
12
on
and
an
a
annual
half. I
rate.
don't know if we can see
Core PCE price index rises 5.1% on an annual rate. Personal consumption rising at 3.1% as well.
Renko. Yeah. So yeah, I covered pretty quickly for my risk at the VWAP, and it just bounced off and it's come all the way back again. Yeah, the trade's probably going to work out, but it needs some time. I might look to scale in another bit now.
So looking further into this GDP report here, is the decrease in real GDP reflected decreases in private inventory investment, exports, federal government spending, and state and local government spending, while imports, which are subtraction in the calculation of GDP, increased. So personal consumption expenditures, or PCE, non-residential fixed investment and residential fixed investment increased.
I'm talking to myself. Anyway, I'm just saying I'm very happy with the way I behaved on that number. I took the trade without hesitation. I was just looking for the numbers. I had a plan beforehand. I will do a seminar actually about how to trade numbers. I learned a lot of good things when I was on the floor about, you know, how top traders behave, trading data. GDP is a big number. It's the first one of the quarter. First one of the quarter. It's the first number we get out the first quarter. It's quite important. So the market's looking at it for direction. It's a number that the Fed look at a little bit, so it's worth paying attention to. I had a plan. I didn't detail my plan because it's not something I do yet for you guys, but it's something I want to start introducing as to how to trade numbers, how to trade figures. A lot of people say, hey, it's not worth trading numbers. I don't agree with that. I used to believe that was the way, but then I worked on a floor and I saw that there was traders making a lot of money just trading the numbers. But it all comes down to having a plan, having a rule, and having your risk predetermined before you take the trade. To be honest, I feel really sick that this thing came back, spiked me out at 97, and I didn't get back in again. Well, getting back in again is not the question. The disappointment I have is the fact that it came back and stopped me up pretty much to win a couple of ticks. But that's trading, and that's how it goes. And this is going to be an interesting open, I think, now, given where we are. We're opening out of out of range of yesterday. We've got a little bit of a gap. We might even close it going into the open. I'm not looking to take any trades on right now, just because of the fact that we impulse lower. Great, that's what I wanted to see, but I wanted to see a continuation. But we held at the overnight mid. Overnight losing my words. Overnight VWAP. Jesus. Okay. So. Sorry, I'm gonna just. There's something wrong with my charts here. That wasn't the overnight VWAP that held. So I'll take that back. VWAP's a little bit lower, 81, not 90. No, where did it hold? Held 85. Okay, my VWAPs on two different charts are different. One's at 81 and one at 85. If anyone's watching, other than my mum and my stepmum, yeah, can you please let me know which one it is? I will try and find out myself. But one of my charts has got the wrong number. Anyway, that was my trade. I stuck to my plan. I took it quickly without hesitation. I had my risk already predefined before I entered. Taking a trade like that, I'm looking for momentum, and we didn't get it. So trade's done, over and out. Okay, right. Catch you up in a bit. I'm going to put some hair wax on my hair and make myself look nice for you guys a little bit later. All right, catch you for the open. Oh, I haven't done a debrief, so I'm going to come back in a bit and do my debrief for you guys. I'm running really, really late with all this, but it's all in the notes, and I need to vet it actually because I haven't proofread it, so hopefully I haven't made any mistakes. But yeah, it's all in the link below. I think it's the right link. I need to check everything because I've been rushed to get everything done. Then I'm going to put some hair wax and I'll come back and we'll do a live debrief. All right, guys. Bye.
So seeing some commentary from Moody's says, except for Russia, I do not expect a recession in any G20 country in 2022 or 2023.
Okay, guys, I'm just going to run through my debrief. I'm not going to talk too much about plans, so it's a bit too late in the day for that. So I'm just going to quickly go through the debrief of yesterday. These are my notes for today. There we go. All right, so
So Moody's now
yesterday
on a global
was a bit
macro
of a chop
outlook for
fest, like
2022 to 23.
expected.
So this
I
lowered
said
their
in my
2022
stream early
growth
on,
forecast for Japan to 2.4% and reduced 2023 growth forecast to 1.2%. Does bring us now to 10 minutes away to the top of the hour, where we did hear earlier in the week that we could be hearing comments from US Secretary of State Blinken, who will be speaking on China policy. Some more commentary from Moody's, who maintained their UK growth forecast for 2022 at 2.8% and revised down 23 forecast to 1% from 1.4%.
okay, sorry, I won't be talking over the scorecard I said before because I actually want to be listening to him. So I'm going to quickly run through my debrief of yesterday and things that I was watching out for and what I did. I didn't do very much. I took one good trade early on. I think I bought it around 40s the prior close. It wasn't exactly my number one scenario, but I was aware of potential continuation of this move higher. So what did we get yesterday? I'll just show you on the minute chart what happened. So we had an initial impulse lower. It just tested back below this little zipper here. You see that little candle? You can see that candle, I think. Yeah, you can. Good. Right. So it just pushed back a little bit on the open initially, and I just saw a strong impulse higher. Seeing it push above this area that we'd formed going into the open, I was thinking, right, got to think about longs now. Got to think about longs, impulsing high. So where am I looking to take a long? I'm looking for some kind of, I can just jump into it, and then I've got the opportunity of it maybe coming back and killing me. Well, not killing me. I might take a stop, but I'm looking for an area where I can get involved in that makes sense to me in terms of risk. So I'm looking for like a consolidation zone, some kind of a pullback or something like that where I can just, clearly define my risk. And that's what you should be doing too. So after the initial impulse, I was looking for a long, and I managed to sort of find an area which was, knocking around where the prior day's close was around, I think it was around 41s. Which is where I got involved in, which is this area here. So we initially went all the way up to the 50s area. We pulled back into the prior close, and that's where I was looking to maybe put some risk on, because I saw some structure to get to find my risk. And then it got choppy, and this is something we've seen a lot of, and it took a lot of patience. I got a couple of scales out a couple of times. I stopped out once. I got the trade back on again. But I realized that this was probably chopping around. And one of two things were happening here. One, shorts were just absorbing everything that was getting bought into them. And then they were going to take this back down lower. That could have been a possibility. But I had my risk in place. So, I don't know. Or the longs could win this battle that was taking place between 2 and 4 on my chart, and then we might get a trend and a break higher, which is what I was going for. So given the fact that we had this impulse higher and this very immediate move higher, that's what I took, and that's the trade I took. So I got in, I scaled out a couple of times here, stopped out once here where number 3 is. That was annoying. The annoying thing is that I maybe could have been a bit more patient and got involved around the 38s instead of 41s. I only gave myself a very tight risk, which was maybe not the best idea, and I stopped out after getting a scale out, which didn't make it very painful, but once you start seeing it rotate back higher, you're thinking, oh my goodness, I've missed this trade. But luckily, it came back down into the 40s, and I got long, and I scaled out at the top of the range this time, where I then held the remainder of the trade, trying to scale out sensibly and take it as far as I go. One thing I really want to do for you guys is basically do a little stream and a webinar explaining how to spot a trend and how to determine whether or not that trend is running out of steam and whether or not you want to be looking at maybe getting out your long or short, whatever it is. But I think yesterday, once you start seeing large rotations coming back below, the higher highs, higher lows. Once you see that kind of pullback, you've got to start thinking, if this starts breaking below where we've just held, where was this this little stalk zone here, generously provided by CT Convergent Trading, if it was starting to fall back below that area, I want to think that I'm wrong holding this, and I want to be looking to get out. So it's all about observing the trade. I got out of I got out of one lot right at the high, and then I had a little tiny weeny one that I was trying to hold for a bit longer, but then I got out of it in this area here, this chop zone here, because what I was seeing here was just this kind of holding below the prior little holding area, and yeah, and then we got this, slight liquidation lower. You can see VWAP wasn't holding, no interest in holding, and it was a bit of a, it was quite balanced up until we had the Fed. So everyone was basically waiting for the FOMC yesterday. So we had this, big move higher from the open, pulled back all the way down almost to, just above where the open was. I think the open was 28s, and we pulled back down to 36s, where my little number 6 is. When you see that kind of move, you need to be thinking this is going to get choppy. This is choppy, and it was choppy. Once you start seeing it pull back, the likelihood of two-way action is high, and it's likelihood of balance into the FOMC minutes is high. So things like FOMC, they just go out the window for me. I'm not interested in trading those.
Six OPEC Plus sources say that OPEC Plus is set to adhere to their policy at the June 2nd meeting, raising July output targets by 432,000 barrels per day.
Okay, I want everyone to remember I'm still a news trader, and I do trade other products. So if something is said, I might just turn you off and try to do the right thing. Okay, so we were waiting into the Fed, and I think I said before the Fed happened, I was having a few technical issues again, but I also said more importantly that we're in the middle of weekly balance, we're in the middle of daily balance. So just expect whip, and I've seen this so many times before, and you only know it if you've seen it. And I've journaled it, and this is why journaling is important, and to tag your journals and make sure it's you do the right thing. We saw whip, like please look at my notes from yesterday and just look at the rotational footprint charts I've got. We were getting 10-point rotations in 3 or 4 seconds. So if you think you're good enough to trade FOMC, you are going up against some of the fastest algos, and yeah, it's just not worth it. And if you are going to go into that environment and you have a plan, you better make sure you've got some risk. You better make sure you've got some, good risk control, and also, the likelihood of that risk going wrong, because, a stop is a stop, but you need to have a market, if you're not working market stops, that is, stops can go through you. And if you are working market stops, you've got to be prepared to, get whipped, have considerable slippage, even in something like the ES, because liquidity just disappears, and then you're seeing 10, 20, 30 lots trade at each price, and that's just something you need to be aware of. So I don't recommend trading that environment. I like for it to sort of settle down, but I was kind of done for the day. I think, did I take a trade late on? I think I might have taken a trade late on after the stream had finished. I was looking for a short near the O2s, which was an area that I mentioned in my debrief yesterday. But there's an area of interest. It's also in my targets. But the key thing to take away from yesterday's trading day was the fact that I expected some kind of balance for the day. Yes, we were looking to start breaking away. Yes, we had lots of reasons to be looking to take a trade. But once we got this initial move one way, and then secondary move backwards, I'm starting to think, right, okay, this is balance. So it's really, really important to sort of recognize when there's an environment that you want to be getting trading, to be getting your trading done, and that wasn't the environment for me. So yeah, and if I was to be trading that,
spot 83% for May 25th.
They're just scalps. They are just, they might be big size, small size, it doesn't matter, but they are. I'm just looking for key areas to take, 4, 5, 6 point scalps, all on, all off kind of trades. I'm not running things because I expect things to rotate back. But if I do see order, the right thing in the order flow, like this little area here. You see like where number 6 is. We've got this area that was defined from early on in the day, and I saw it where number 3 is, and then we held once, twice, thrice, and I think I got involved on this little candle here actually going into the FOMC. I took 4 or 5 ticks out of that trade, and yeah, that was pretty much it. Okay, anyway, so takeaways are: make notes on what's been going on FOMC days, on ECB days. Just journal these days because they can really help you remember and understand the kind of flow you might get either on the FOMC or after.
So just noting an update to the docket here is
again,
US Secretary of State Blinken speaking on China policy.
Minutes,
so it did announce earlier in the week that was due to start at 9 a.m. Eastern time today. Since then, it has been pushed back to tentatively between 9:50 a.m. Eastern time and 11:30 a.m. Eastern time. So it should be starting anywhere between that time range.
Okay, so yeah, that's all I've got to say. Is I've lost my train of thought now. That guy put me off now. So yeah, just journal these days and tag them. But what I want to say was that the FMC minutes, it's old news because the FMC, we've already had Brainard come in, not Brainard, Bullard, who's a hawk, and he said that they might pull back on rates. I think I mentioned that 2 days ago when it happened. There was a big risk reversal on Friday when Bullard came out and said that we were at the yearly lows. Bullard, obviously seeing his 401k suffer, decided to do something about it because he can. And basically he called out that, the Fed, they're trying to get inflation under control, but if they do, this might be, there might be a scenario where they pull back rates next year, which is insane.
So according to Libya's oil minister, Libya crude output is at 750,000 barrels per day.
I'm going to turn him off, actually. He's not saying anything important. I'm going to turn him down. Let's turn him down. So I'm just going to quickly go and jump into today and what I'm expecting. I think I put in my plan, I am sort of GDP dependent. We had a slightly weaker GDP. We've not seen bonds really move off it. In fact, long end bonds are on their lows, so they're just thinking, nothing to that data. So nothing has changed since that GDP data. I did take a trade on the GDP. It was partially successful. I managed to get half my position off for a scale, and the rest came back for a small loss. Anyway, my scenarios are, I won't go into those too much. But yeah, I just want to just quickly cut to my screen now and just show you the kind of, action we get on data. So that's the release at 1:30 we've got here. And you've got this immediate drop, but then it holds on these VWAPs, which I think are VWAPs. I need to make sure that they're the right ones. The overnight mid and the VWAP. And then it touches there and then rotates back through the scene of the crime, stopping people out, me. And then the trend that being predominant going into the session is continuing. So I just want to make you aware that, even if we do have, so this is actually giving me a very strong bias to the upside because we've had some negative data, but then we've seen buyers pick up that pullback and then just take things higher. So that's something I'm just alert to now going into the open, that we might, we might be, might be looking at a continuation of this trend higher. Look at my notes. I've done my plans in there. I've done my best today, given the time that I had. I'll try and add to it throughout the day and fix it a little bit, because I know it's a little bit weaker than usual, but I was a little bit rushed for time this morning. Getting this stream up and running has been fun, but it's also been very time consuming, and I'm trying to do the best I can. Okay, that's all I've got to say for now. I'm going to leave now to go and watch my friend Morad Asghar at Convergent, where he will speak gospel, because everything that comes out of that guy's mouth is gospel, and I advise you to watch him. I've learned a lot from him so far, and I hope to continue doing so. So I'll leave you to it. I'm going to disappear. Am I on screen? Sorry, I'm a bit lost. Yeah, I'll leave you to it and to prepare for your open. But I have a slightly bias. So just I won't talk about brief. I said, but I'm looking for a pullback at sensible areas and then a resumption of this move higher, targeting 40.15, which you've kind of hit on the overnight. But I won't be willing to just buy up here on the open unless I see some kind of strong impulse, and then I'll look to like take some favorable risk somewhere. But okay, I'm going to leave you now because I said I would, and I need to go and watch Convergent and FT71. Okay, bye.
the US doesn't want a Cold War with China.
All right, guys. So just quickly cutting back to what we were expecting, what we saw. Bit of an impulse higher. So surprising, really surprising, which just goes to show the strength of this move higher that we've had. So after FOMC yesterday, anyway, I would have expected a small pullback given the fact that the overnight inventory was slightly long, and we were trading with a small gap, top of the weekly range. I would have expected a small pullback on the open, but we just didn't see it. And we just saw this impulse higher after we broke out this very, very tight area that I was talking about in my notes. Let me just bring up my notes. So at 417, I said these local lows are very vulnerable to the open at 39.90. That's pretty much around here. And I also mentioned that we might take out the highs. So this area I was actually really watching to see what would happen on the open, and I was willing to take a trade very actively either side of it, because to the downside I was willing to get short, because I would think that the longs up here eventually going to give up, and we might have a little flush, at least back down to the 80s. So that's a quick scalpy trade. But that's not what we saw. We actually saw the opposite. We saw it break to the upside, where I took a long. I actually took the long on seeing some absorption down here. I'll quickly try and jump to a footprint if I can, but I'm not going to do it right now. I'll try and put it in my notes. But I saw a bit of absorption, lack of willingness to go lower. So I took a long at 89s, I think. I scaled out quickly, just at the top of this area here, just to cover my risk. And once my risk was off, my target was this area here around the 4,000, and then to 12s, which was up here. Anyway, I got out at targets. These were like predefined targets I had in my head. It's an early trade, and I've done it on very small size, so it's not something that I don't like taking big trades on the open. Sometimes I will, but not today. We also had to reflect on the fact that we had Nvidia, who had earnings yesterday, and we tend to get like a reaction on the open. I haven't even checked right now, but I'm guessing that the Russell is doing better. Yeah, it is. The Russell is doing slightly better than the Nasdaq this morning. That's actually a spread in a past life. That's a spread that I'd like to have on for the first half an hour of trade today. I haven't even looked at what it's done, so I have no idea, but I would expect Nasdaq to be slightly weaker. So in my head, taking a long is slightly more risky than being short. So I've actually been monitoring for a short up here. You can see that the initial move higher has found some resistance, which we kind of expected, because if you look at your high time frame, let me have a look. No, wrong one. So that's your high time frame profile. Okay, you're just seeing, this area here is going to offer some kind of resistance, and all we're doing is just covering and repairing this poor structure left over from the 18th. Okay, so I was quite happy to get out here. I might have not hit the high, but my job's not to take the highs. It's to get somewhere near there and take the trade from a sensible position to a sensible target, and that's what I did, especially early on in the trade where we have seen moves quickly reverse. Okay, so I'm going to leave it at that. Don't forget, just in the background in mind, this move here, don't go chasing it. I wouldn't go chasing it. I wouldn't be buying up here necessarily. I've always got it in my head that never chase A's, because B's cover A's quite often. So yeah, you see it here as well. You've got a quite deep pullback, so if you start thinking about buying at these highs, you could get into trouble. Obviously look for sensible pullbacks. Maybe back to the mid makes sense to me, actually.
Just
the mid makes a lot of sense,
for you,
actually.
if anybody interested, one of our financial users, Tony, they're going to be doing a webinar on risk on, risk off. And no sign up is needed. There is a link on the top of the feed
So I
if
think
you'd
the
like
mid's
to tune
around
into
the
that. Does start at
4,000
11
mark,
a.m. Eastern Time.
4,003,
Again, that's
which is
one of
where
our
I
very own
scaled
Tony.
out. So
They're
I
doing a
might be
webinar
willing
on
to
risk
get
on, risk
something
off
on
at
there
11
on
a.m.
a
Eastern Time.
pullback. But at the moment, it is looking like a strong trend. And I'm not on this train, but I'm just happy to have taken my trade for a good risk reward. I stuck to my plan. That's the main thing. Just to give you guys some background as well, since I've started this stream, my ladder is very, very jumpy. It's really hard to read the order price. I actually have another systems ladder up, which is helping me to trade, to execute. But by God, I find it very frustrating, and I need to get to the bottom of this because it's not sustainable. It's not good for my trading, and that's the most important thing to me. But yeah, if anyone has any ideas as to how to get OBS and a trading platform running at the same, and charting, trading, charting, and OBS all at the same time, running well, I really appreciate that. Okay, thank you.
So we are now 10 minutes away from the top of the hour where we get the US pending home sales change month on month. Forecast minus 2% on the prior minus 1.2%. It was to get the US pending homes index, saw a prior read of 103.7. So also keep in mind we are awaiting comments from US Secretary of State Blinken, who'll be speaking on China policy. He has already began speaking, however, we just haven't seen many comments from him yet. So 5 minutes away now to the top of the hour, where we do get the US pending home sales change month on month. Forecast -2.